I lost everything because I signed one piece of paper. My house. My retirement. My relationship with my own son. And the worst part? I thought I was being a good parent. This isn't just my story. This happens to thousands of families every single year. Parents who love their children so much that they destroy their own financial future trying to help. And I'm going to tell you exactly why this happens and how to avoid it. Because here's what nobody tells you about guaranteeing your child's debt. You're not just putting your signature on a loan. You're putting your entire financial life on the line. Your home. Your savings. Everything you've worked for your entire life. Let me take you back to where this all started. My son came to me with what seemed like a great business opportunity. He needed $50,000 to start his own company. The bank wouldn't give him the loan without a guarantor. He looked me in the eyes and promised he would never let me down. I believed him. Why wouldn't I? He was my son. I raised him. I knew his character. Or at least I thought I did. So I signed the papers. I became the guarantor. And that single decision changed everything. Here's what most parents don't understand about debt guarantees. When you sign as a guarantor, you're not just backing up your child. You're becoming equally responsible for that debt. In the eyes of the law, that debt is yours just as much as it is theirs. The business failed within 18 months. Market conditions changed. Competition was fiercer than expected. His partner pulled out. There were 100 reasons why it didn't work. But none of those reasons mattered to the bank. They wanted their money. And they didn't care whether it came from my son or from me. Actually, that's not quite true. They preferred to come after me. Why? Because I had assets. A house. Retirement savings. Things they could actually take. My son had nothing. He was young. He could declare bankruptcy and start over. But me? I was in my 60s. I didn't have time to start over. This is the brutal reality of guaranteeing debt. The bank will always go after whoever has the most to lose. And that's usually the parent, not the child. Now let me tell you about the emotional cost. Because losing money is one thing. Losing your relationship with your child is something else entirely. When the debt came due and my son couldn't pay, everything changed between us. Every conversation became about money. Every phone call was tense. Every family gathering was awkward. The love was still there, but it was buried under mountains of resentment and guilt. He felt guilty that he couldn't pay. I felt angry that I was losing everything. And neither of us knew how to talk about it without fighting. Eventually, we stopped talking altogether. It's been 3 years now. I've lost my house. I'm living in a small apartment. My retirement is gone. And I haven't spoken to my son in over a year. Was helping him worth all of this? Absolutely not. And here's what I wish someone had told me before I signed those papers. First, understand that love and money are two completely different things. Loving your child doesn't mean you should risk your financial security for them. In fact, the most loving thing you can do is teach them to stand on their own feet financially. When you guarantee their debt, you're not helping them build independence. You're enabling dependence. You're teaching them that someone will always be there to catch them when they fall. And that's not how the real world works. Second, realize that your financial security affects more than just you. If you're married, you're risking your spouse's future too. If you have other children, you're potentially taking away resources that could help them. If you're near retirement, you're gambling with your ability to support yourself in old age. Think about what happens if you lose everything. Who takes care of you then? Your children? The same children you just sacrificed everything for? Now they're burdened with taking care of an elderly parent who has nothing. You've just created a bigger problem than the one you were trying to solve. Third, understand the legal reality. When you sign as a guarantor, you have all the responsibility but none of the control. You can't make business decisions. You can't see the bank statements. You can't intervene if things start going wrong. But you're 100% liable if it all falls apart. That's a terrible position to be in. You're trusting someone else with your entire financial future, and you have no way to protect yourself. Fourth, consider the alternatives. There are so many better ways to help your children succeed financially. You can teach them about money management. You can help them build their credit properly. You can advise them on their business plans. You can even give them money as a gift if you can afford it. But guaranteeing debt? That should be your absolute last resort. And even then, you should think very carefully about whether it's worth the risk. Let me give you some specific scenarios where parents commonly guarantee debt, and what you should do instead. Student loans. Many parents feel obligated to guarantee their children's education loans. But here's the truth. If your child is going to a school that requires such massive loans that they need a guarantor, they might be going to the wrong school. There are community colleges. There are state schools. There are scholarships and grants. Education is important, but it's not worth bankrupting yourself. Business loans. This is where I made my mistake. Your child wants to start a business and needs you to guarantee the loan. Here's what you should say instead. Help them create a solid business plan. Encourage them to start smaller with their own savings. Suggest they find investors or partners who believe in the business enough to share the risk. If the business idea is truly good, it will find funding without requiring you to risk everything. Mortgage guarantees. Your child wants to buy a house but can't qualify for a mortgage on their own. This seems harmless because houses usually appreciate in value, right? Wrong. The 2008 financial crisis taught us that houses can lose value quickly, and even if the house holds its value, what happens if your child loses their job and can't make payments? You're stuck with a mortgage you probably can't afford on top of your own expenses. Car loans. This seems like a small thing. It's just a car. But car loans can be $15,000, $20,000, even $30,000. And cars only depreciate in value. If your child defaults, you're paying off a loan for a car that's worth less than what's owed. That's a terrible financial position. In every single one of these scenarios, there's a better solution than guaranteeing the debt. And that better solution usually involves your child either waiting until they can afford it themselves, or finding a less expensive option. Now let me address the guilt. Because I know what you're thinking. You're thinking that if you don't help your child, you're being selfish. You're being a bad parent. You're not supporting them when they need you most. I thought the same thing. And that guilt is what pushed me to sign those papers. But here's what I've learned. Real support isn't about saying yes to everything. Real support is about teaching your children to make smart financial decisions. It's about letting them experience small failures now so they don't experience catastrophic failures later. When you guarantee their debt, you're protecting them from learning crucial lessons about financial responsibility. You're teaching them that they don't need to qualify for things on their own merit. You're setting them up for a lifetime of financial dependence. Is that really what you want for your children? I didn't think so. Let me also talk about the statistics, because they're sobering. Studies show that about 40% of guarantors end up having to pay some or all of the debt they guaranteed. That's not a small risk. That's nearly half. And among those who do have to pay, the average amount is devastating. We're talking tens of thousands of dollars. Money that was supposed to fund retirements. Money that was supposed to be emergency savings. Money that was supposed to provide security in old age. All of it gone because of one signature on one piece of paper. Here's another statistic that should concern you. The majority of family relationships that involve guaranteed debt become strained or completely broken. Money problems are one of the leading causes of family conflict. And when you mix parental love with financial obligation, it creates a toxic situation that very few relationships can survive. So what should you do instead? How do you help your children build their own financial foundation without risking your own? Start by teaching them about money early. Don't wait until they're adults and asking you to guarantee loans. Teach them about budgeting when they're teenagers. Teach them about credit scores and interest rates. Teach them about the difference between needs and wants. Give them the financial education that will help them make smart decisions on their own. Encourage them to build their own credit history. There are secured credit cards designed for people with no credit history. There are small loans they can take out and pay back to establish creditworthiness. Help them understand that building credit takes time, but it's worth the effort. Teach them to live within their means. This is perhaps the most important lesson of all. In a world that constantly encourages us to buy more, spend more, have more, teach your children that financial peace comes from spending less than you earn. Teach them that delayed gratification leads to long-term success. Show them how to save and invest. Instead of guaranteeing their business loan, teach them how to save up their own capital. Show them how compound interest works. Help them understand that building wealth is a marathon, not a sprint. And most importantly, set boundaries. It's okay to say no. It's okay to tell your child that you love them but you won't risk your financial security for them. That's not being cruel. That's being wise. And in the long run, it's better for both of you. Let me end with this. If I could go back and talk to my younger self, the self who was about to sign those guarantee papers, here's what I would say. Your job as a parent is to raise independent, capable adults. Not to shield them from every difficulty. Not to solve every problem for them. Your job is to give them the tools they need to succeed on their own. When you guarantee their debt, you're taking away their opportunity to prove themselves. You're taking away their chance to build real confidence in their own abilities. You're taking away the valuable lessons that come from having to work for something and earn it yourself. Yes, it's hard to watch your children struggle. Yes, it's painful to say no when they ask for help. But sometimes the most loving thing you can do is step back and let them figure it out themselves. Because here's the ultimate truth. If you sacrifice your financial security for your children, you're not just hurting yourself. You're potentially creating a situation where your children will have to take care of you later. You're passing your financial problems on to the next generation instead of solving them. That's not love. That's not help. That's just transferring the burden from one person to another. So please, learn from my mistake. Don't guarantee your children's debts. Teach them to build their own financial foundation instead. It's the greatest gift you can give them. And it's the only way to protect both your future and theirs.